Top news as of December 8, 2025. World and global economy. UNCTAD warns global financial system needs reform. The UN Trade and Development Agency cautioned that the global financial system must adapt to better serve real economies, especially in developing countries. Financial markets now heavily influence global trade, and high financing costs plus volatile capital flows threaten growth in many poorer nations. The report calls for structural reforms, modernizing trade regulations, reforming the international monetary system, and expanding capital markets so that long-term, sustainable financing becomes accessible. Without such reform, UNCTAD warns that financial volatility could further depress global growth. Global growth is now projected to slow from 2.9% in 2024 to 2.6% in 2025. Global central bankers are on stage this week. Big decisions ahead. Key central bank leaders, including from the Federal Reserve, Fed, Bank of England, BOE, European Central Bank and Bank of Japan, are set to make important policy announcements. Markets widely expect the Fed to cut interest rates soon, given signs of a cooling labor market and economic softness. A likely rate cut could ease borrowing costs globally, but also raise concerns over inflation and financial stability, especially if economic growth remains fragile. The decisions this week may shape global capital flows, exchange rates, and investment strategies heading into 2026.
Finance and markets. Market watchers expect a rate cut from the Fed soon. Economists and analysts believe the Fed will likely cut its key interest rate by 25 basis points at the upcoming meeting, driven by weak employment data and slower economic growth. If enacted, this would be the third rate cut in as many meetings, potentially bringing benchmark rates down to a 3.5% to 3.75% range. Lower rates could reduce borrowing costs for households and businesses, but might also risk reigniting inflation or speculative asset bubbles. A warning: finance-driven volatility could hamper developing economies' growth. According to UNCTAD, over 90% of global trade depends on bank financing or dollar-based liquidity. As financial cycles continue to dominate, many developing economies face high financing costs, volatile capital flows, and growing exposure to climate-related and systemic risks. The report argues structural reforms are required to align finance with real economic needs, otherwise global inequality may widen and sustainable development could be undermined.
Technology. Samsung Electronics regains top spot in global DRAM market. Samsung has reclaimed the number one position globally in DRAM revenue for Q3 2025, surpassing rival SK Hynix. Its DRAM revenue rose nearly 30% quarter-on-quarter, giving it a 34.8% market share versus SK Hynix's 34.4%. The rebound is driven by higher shipments of high-bandwidth memory, HBM, used heavily in AI workloads, and rising prices in the general-purpose DRAM market. As global demand for AI and large-scale computing grows, memory chip makers are entering what some analysts call a supercycle period. Meta scales back its metaverse ambitions, pivots toward AI and wearable tech. Meta reportedly plans to cut as much as 30% of its 2026 budget for its metaverse division, Reality Labs, including projects around VR and AR and virtual worlds, e.g. Horizon Worlds, Quest VR. The decision follows years of heavy losses, over $70 billion since 2021, and disappointing consumer adoption. Instead, Meta will redirect resources toward artificial intelligence, especially AI-powered wearables and smart glasses, signaling that AI, not metaverse, is now its priority. The pivot was welcomed by investors. Meta's shares rose 4% after the news broke.
What this means: big picture analysis. The overall picture painted by these developments. The global economy remains fragile, with slower growth and potential financial stress, especially for emerging and developing economies heavily reliant on external financing or global capital flows. Reforms may be needed to build resilience. Central banks are responding. A rate cut by the Fed and possibly others could provide a near-term boost by lowering borrowing costs, but at the risk of inflation, asset bubbles, or long-term instability. In technology and manufacturing, demand tied to AI and data center infrastructure continues to reshape industries. Memory chip makers like Samsung benefit directly. Major tech firms are reevaluating previous big bets, like metaverse, and reallocating toward AI, reflecting shifting investor confidence, consumer demand, and long-term strategic outlook. For countries like South Korea, which play a key role in global semiconductor and memory chip supply chains, the DRAM industry's rebound could bring strong export and growth opportunities, but they will also feel side effects of global financial volatility and shifting trade and finance dynamics.